Good morning, everyone. It's August 15, 2023, 12:40 in the afternoon, and I'm here to do a market recap. So for today, SPY had given us some opportunities, and it's a very good day to trade today, just because SPY, if you look at right here, we have SPY is almost flat, just down by 0.83% or down by $3.73. Now, if you are a long trader, a swing trader, then this does not make you any money at all because that's not a lot. But for a day trader, we like this swings. So we like that move right there, very volatile, 31 million shares. And I traded a couple of stocks today. So let me just, all right. So considering that the SPY, let's look at yesterday's closing price and yesterday's candlestick, comparing it to today. So yesterday's candlestick, this is what we call an inside bar day. So you have yesterday's high, yesterday's low, and at one point it touched 444.39. So today it opened in between this candlestick, and that's what you call an inside bar. So when it opened around 446.50, then went all the way down to this support, which is the moving average, to around 443.5. We reached that level before 11 today. So considering that SPY is an inside bar, the strategy today was to reduce the share size that I'm trading. So if you notice here, not a home run, but everything was green. That is what I've been working on lately, just because if we look at the SPY, we can see here that there's a lot of inside bar here. So let's see here. So this is the big candlestick here. That one opened right here until it popped and went all the way down. So if you're just trying to make a consistency or a consistent profit doing day trading, you wanted to adjust what the market is giving you. Since SPY, most especially with this consolidation, is giving us mostly an inside bar, then one way not to get trapped is to reduce your share size, and at the same time to lessen the commission is to let your winners run and take less partial. So strategy wise, been doing less shares as well as less partialing. So let's look at what I traded today. Let's look at Amazon. Amazon was a break-even trade. So what I saw with Amazon in the daily is we have touched this level right here, which is close to that moving average. That is 137.7. When I saw that we are about to touch that 137.7, kept an eye on Amazon, waiting for a bounce to that area because that area looks like a very strong support. This candlestick right here was close to that area as well. And we can see right here 2 days ago, it went below that level and had a pop. So another strategy aside from reducing your share size, also reducing the partialing, so you lessen the commission, is looking at a higher time frame. What I've been trading recently as well is focusing on the 5 and the 15. Also like scanning through the 30 minutes as well. I haven't had any trades at all for the past couple of weeks using the 1 minute, always on the higher time frame, lesser chance of getting stop out. So let's look at the 5 minutes for Amazon. Amazon was an inside bar, just like a SPY. So it opened inside previous day candlestick. And what I saw was we went all the way to 141.13, touched this level at 137.75, and that was the level of support right there that was tested yesterday. And from that support, it bounced up. So when I was looking at that support, 137.63, told to myself that could have been a very strong support. So what I saw here is a bunch of consolidation. It did not even have the momentum for this one to retest that very strong support. So did not get to test that one. We have a bunch of consolidation here. When I saw that on a higher time frame, which is, let me just put this one now to a 15 minutes. All right, on a higher time frame, what we can see here is once we have touched this level, the high of this hammer, that had been a very strong support. So I was looking at this one. I was trading a different stock when this hammer formed, but the good entry could have been long at the high of that hammer and just trailing your stop here. If you put your stop loss below the hammer, then you could have stop out, but could have re-entered right here, but very small move there. So when I saw that it was about to test again that level, so I already have a price in mind that at that level, I'll be interested in longing this stock. Just because I missed my entry because I was looking and was trading a different stock, I waited for that price area to be touched again. So 138.13, sure enough, at this candlestick, it touched that level again. So I entered long, trailing my stop, very tight stop lost. And let's zoom in now to 1 minute. So that one was my entry. And since I only have a couple of shares here, I believe it's only like 400. Usually before I do at least 1,000, then increment it by 1,000. Now it's just 400. There's a huge pop right here. And since I only have 400, it did not even take partial on that. 400 shares, if you take partial of it, 25%, 50, you'll end up just paying lots of commission. So look at how the algorithm now is in your favor. There's really nothing going on with the volume bar, but because the algorithm is on your side, yeah, we had a huge pop right here. Since I'm not taking any partial, still higher high, higher low. Just because I put now my stop loss at break even, it did stop me out before it had that move. So timing was right, but that's the pros and cons of getting a tight stop loss. Since my stop loss is at break even, I'm not going to allow this stock to trade against me or go against me. So yeah, I got $4 there. I just put my stop loss just a little above this area right here, this red candlestick, and that's where I got stop out. Did not get to capture this move, but could have captured that if I kept the stop loss a little wider, but that's okay. Again, goal today is to just have a tighter stop loss, lower the share size, let those move run, lesser partialing so I don't end up paying lots of commissions. Next one is Disney. So what I saw with Disney, this one, again, very small share size. I was only trading 400 share size. What I saw was, let's look at the daily. So always start with your daily. Disney, I was trading Disney on this day, this and this. So I kind of see how Disney's trading pattern is working. So what I've been looking at Disney is, this, by the way, was a very good day trading opportunity for Disney for me. So that was 3 days ago, or yeah, last week. So what I saw with Disney is it opened below yesterday's closing price. So yesterday's closing price is all the way up here around 89. At one point, it touches 88. We did see this gap. So short bias here. When I saw that Disney is testing the high of the day, so first touch, second touch right there, I need a confirmation first that we are definitely heading lower before reshorting this one or starting a position to the short side. So 15 minutes, you have the first red candlestick. 5 minutes, if you look at the 5 minutes, that's a very big indicator that we're reversing. Keep going back and forth, the 5 and the 15. When I saw that this had formed a very big wick, I know it's minute here, but if the 5 minutes, look at this one. This is the wick that was created in the 15 minutes. So 88.23 became a very strong resistance. You have that wick right there. I entered short. Stop loss right here is just above this body of this candlestick. Added to my position and then just trailing my stop. Now, first, I partial it here just because we did have that move already. And then just trailing my stop at that wick, I got stop out. But with that, I got 128. So that is the Disney trade. Next one is Lyft. For Lyft, I went short and long. So for the short side, this one was a fun trade right here. On the daily, what we can see with Lyft is it's very strong. It's actually now up by 4.2, but at this level, at one point, it was up by more than 5%. So what I saw with Lyft, with the daily, is you have a bunch of consolidation right here, 3 candlesticks that were so strong. And then now at the open, we were above 3%, which is my criteria for a gap down, gap up lists. So you have more than 3% here, very strong at the open. You broke that VWAP. Another thing that I'm doing recently is I'm not doing any opening range breakdown. You can make a lot of money with that strategy, but also I just don't want to be chasing any stock at the open and lowering my my profit just because those opening range breakup is a very risky play. So if you are able to ride it and able to catch it and you are able to time it at the right time, then you're going to make a lot of money. But that also increases my risk. I want to lower down my risk as much as possible. So that's the reason why I stay away from opening range breakdown and breakup. SPY had been very choppy, mostly at the open. So at this point, if there's no trend trade, skip the opening range breakdown, breakup, not even worth the time and not even worth trading, just because it will increase your risk. At the same time, it's just not a fun trade to do, because at the end, if you are on the wrong side of the trade, then you'll just end up digging yourself out of the hole, which is what I've been noticing, what I've been doing before. So now switch my strategy, and it had been working so far. And just like today, it's 100% green. So yeah, so this strategy had been working for me. So going back to the lift. So with the lift, again, it was a gap up, very strong, was looking at it, looking for a sign of reversal and a sign of weakness. So at the 5 minutes, we did see this big wick right there. You have that resistance on the top that was created. And so what I saw was that wick right there, this candlestick. I entered short below the body of that candlestick. Stop loss is just a little above this area because I entered at this white candlestick. Now the conservative way of entering short with lift is waiting for another confirmation, which is this area right here. The advantages of waiting for a confirmation is you don't not have to suffer the pain that I went through when I went short here, and stop loss is all the way up here. If you shorted at the sign of momentum of the reversal, then that could have been just a very smooth sailing and easier trade than this. But what I saw with lift is the potential for this one to fill the gap. You have a big pop-up at the daily, you have a gap right here, and that has the potential to fill the gap right there rather than just go all the way up. Because looking at how this candlestick had been trading before, it looks like every time it had a pop, it's been filling the gap. So thought process here is it doesn't want to give that empty space, but rather it kind of, what the trend had been happening is, the trend that this lift had been ongoing is it's filling the gap. So I was able to make that conclusion because I went to a higher time frame, which is the daily. So shorted right here. Initially, stop loss is all the way up. So 12.5, around 12.35 is my entry. So I'm risking 15 cents. And that was actually a very good move. So I risked 15 cents and was able to hold it all the way at this level. The way I was able to hold that position is I went into a higher time frame, which is the 15 minutes. And when I saw that the 15 minutes have this huge wick, entered short there, trailing my stop on the previous high of that candlestick. So when it went here, stop loss is here, stop loss is here, stop loss is here, and then you have all the way down here. So I just have my stop loss above that moving average. So was able to capture all the way down there. So this one was the risk and this one was the profit. So that one is, you have just eyeballing it, at least 3-to-1 reward to risk ratio. So that's the reason why lift have given me a nice run there to the short, which is an 830. Next one is the long. Long, when I covered all the way down here, I saw that we have now that first white candlestick, and I went long right here, added to my position, and then we have the moving average there. Now that I made a good and decent amount of profit to the short, I just have still kind of like a weak bias here or bearish bias. So I have my stop loss very tight. And then at the pop right here, I got all out because I got wicked out before it got that move. Did not want to enter that again because at that point, I'm not so sure whether, look at how this one looks like. This one is an inverted hammer and it's a red one. So that could have been just a fake out, and that could have been just a breakdown right there. So I did not enter that one, but to the long, just because I was able to capture this move, was able to get 100 with that. So that one was the lift trade. Next one is Rivian. All right, so Rivian is another fun trade here. Since I have been reducing my share size, what I saw with Rivian in the 5, this one I gave it a little bit of a room. So in the 5 minutes for Rivian, what I saw is this one, we have an oversold right here. Not surprised, because if we look at the daily, we have been having that trend. And this line right here is a very strong support that I place, because look at this one. This is yesterday's low. And since we have touched that low yesterday, that can act as a strong support. So that is exactly where my entry was. So at first, what I did with Rivian was you have the 5 minutes, you have from 21.85 all the way to 20.70. What I saw here was, look at how quick that drop happened. So I entered just like 100 shares here, because what I saw here is if I enter right here at 20.8, which is this level, I do have a support waiting for me at 20.45. So risking 45 cents. So 45 cents times 100 shares, risking $45 just to see whether we still have room for this to go down. And sure enough, it did went down to that support. When I saw that support right here, that's the low of this candlestick, when I saw that it even passed through that support, now created a new low, and that new low, 20.45, had been now the new strong support. This level right here is what I've been waiting for, and a pop at that level. So I went and added to my position here. So 400 shares, another 400, and then just waiting for that good move right there. So the thing that I was able to hold on to this, although it still went against me, is because I only got 100 shares here. I have a support at 20.45, which is this. So although that one was a wide stop loss, but since I lowered down my share size, was able to still tread the waters. And when I saw that this level right here, the support of yesterday, is acting as a very strong support after we have developed a new low, then I added to my position, and I was able to hold this trade all the way to above the VWAP. So now, the way that you get to stay in the trade, not get step out, is if you look into a higher time frame. So look at this one. So again, the conservative way of entering this one to the long is that big confirmation. You have this hammer right here. So if you went long right there, stop loss is the new low of the day, then you're just risking this much to earn that much. I was able to capture and capitalize on this because I only entered 100, and then at that support, which is yesterday's low, I added to my position. Now the new stop loss is the support right here. So since I only have 100 here, this one is 400 and another 400. So that one is total of 900 shares. So the entry here is right here because that is the average here. But since this one is a small position, then that still puts my average cost right here. So was able to have this risk to have this move. So that one is like at least 2.5 to 1 reward to risk ratio. When I saw that we have a big push right there, I was just trailing my stop, and sure enough, at the first sign of reversal, I got stop out there. So 20.97. So with that, just a small position, 240. So yeah, very profitable day today, and less easier trade. So I would say easier trade than my used strategy. So bottom line is, with this kind of market that is very choppy, what you want to do is lower down your share size so you don't get stop out. At the same time, you capitalize on those extreme moves. So lower down your share size is the first. So let's just, so for a risky market and very weaky market, what you want to do is lower down your share size. Next is lessen your partial, and then look at the higher time frame. So that would include the 5 minutes, 15, most especially daily chart. And of course, look at the SPY. To get a bias. That's always is the number one thing. If your SPY is an inside bar, other stocks is an inside bar, then it's a range kind of trade. And that means if it's a range day, avoid opening range breakdown or breakup. So that's what had been working recently. So with that, I hope you guys had a green trading day, and I'll just keep the computer up for now for those of you who are still not done trading. And of course, for our members who are in the course, they get to see the live trade. So in case you guys are interested and wanted to check and learn how to day trade for a living, please feel free to check our website out. And in that website, you'll see some link on how to day trade for a living. It's called ecourseunlock.com. And feel free to email me for any day trading questions. If you just want to dab on day trading and see whether day trading is for you, then just look at the website. We do have some free PDF to learn top trading strategy. That's an opening range breakdown, breakup, 20 pages. That is free. So you can just take a look at that. If you wanted to see if day trading is for you and see how day trading works, you can definitely just check the blogs. We add to this content daily, so learning never stops. And our recap is there, services is here, and we do have our e-course Day Trading Unlocked syllabus right there. And the updated one is we do have more than 64 hours of learning content here. Again, we add to this training every week, so learning never stops. So let's say for what is day trading, we spend 32 minutes to explain that. Platform, setup, and order types, that's another 1.5. So you can see the breakdown here and see what exactly it is that you need to learn to become profitable day traders. Now, let's say you're just curious, I would just encourage you to dig in the old-fashioned books. We do have our book as well that is now published in Amazon. It's called Day Trading Unlocked by Mary de Guzman. Please check that one out. And again, text or email us if you do have any day trading questions. And with that, thank you so much for watching. I hope you guys had a green trading day. We'll do this again next time.